Good day, I am Annalyn Ragmac-Torres, 21 years of age, a business management major and finance student, and I am about to tackle the clearing and settlement system and treasury systems. In settlement types, payments can be gross visas or net visas. When we say gross visas, the bank pays the total amount owed, and the process is separately in each individual. While the net visas, it is the large transactions that are accumulated and offset against each other. The process are usually wait until the end of the day. So, there are two types of transactions. The first one is the FedWire. It is an electronic funds transfer system used by the banks, businesses, and government agencies for large, yet same-day transactions. The FedWire are the one who holds accounts for both senders and receivers that settles transactions individually and immediately. Once it is settled, transactions are final and irrevocable. The fee for the federal payment is relatively inexpensive. So the second one is the automated clearinghouse, an electronic fund transfer system run by the NACHA or formerly called the National Automotive Clearinghouse Association since 1974. It is used by most banks in the country. The transfer of funds can take several days depending on the payer's payment instructions. This system is significantly more complex than the federal system because it compromises a network of bank associations and privately owned processing entities. The cost of an ACH payment is quietly low, usually just a few cents per transaction. So let's move on to the Treasury system. The Treasury requires information that is not normally available through a company's standard accounting system or even from its enterprise resource planning or the ERP system. So the Treasury is in difficult position of requiring information from many sources, most of which are not required by any other company manager, since Treasury is a relatively small department that may not command the resources of larger departments. It can be difficult to collect all the required informations. The following are the three core areas. So the first one is the cash position. The treasurer has an obligation to make sure that the company has enough money to fund the operations. They are the one who control the flows of the money. The second one is the foreign exchange transactions. Some companies have so little foreign business that foreign exchange transactions are declined. But larger firms with established treasury operations will likely need the ongoing purchase and sale of multiple currencies. The third and the last is the hedging. For those companies that elect to hedge their interest rates or foreign exchange positions. In all cases, transactions generated by the treasury system should automatically create accounting entries that are interfaced directly into the corporate general ledger. In addition to these three core areas, the Treasury also needs a reporting system that reveals the global cash positions, investment portfolio, debt portfolio, cash forecast, and foreign exchange transactions. The system should also provide mark-to-market evaluations, scenario analysis, and counterparty risk summaries. This information can be presented through a customized online dashboard that is updated in real time. The Treasury technology also needs to extend the efficiency and control over Treasury activities. Thus, the following requirements should be considered. So the first one is efficiency issues. It is to minimize data entry. The system should never require the manual entry of transactions into the system more than once, and preferably should involve automated data collection and posting so that no manual entry is required at all. The second one is a workflow processing. Approval is required and the system should electronically route the pertinent transaction to the correct supervisor for approval. So the second requirements are the control issues. Audit trail. All treasury transactions should result in a clearly defined audit trail that identifies who made a transaction and the date, amount, and the accounts impacted by the transactions. The second one is the segregation of duties. The system should limit access to certain modules and require approval of few transactions. So the last one is the warning indicators. The system should automatically notify users if transactions confirmation have not been received. These Treasury technology issues are applied in the next sections where we address the Treasury system management. So the last part are the Treasury management system. So Treasury management system involve the creation and governance of various procedures and policies designed to help companies better manage their cash flow and all the aspects that go with it, such as payables, receivables, interest rates, and foreign exchange rates. A treasury management system will be less expensive and easier to install if the treasury reduces the number of outside banking relations that the company has, so that there are fewer customized interfaces to construct. Since it can take multiple months to unwind a banking relationship, this issue should be dealt with well before the system's scheduled installation's date. And that will be all. Thank you.